Right, what I can do is just because I'm still bearish. I still think a lot of the things are going to fall. No, actually, I'm going to continue. This will end up just being a live trading session instead of a tutorial. Let's carry on with this. Basics of trading. God, I'm an idiot.
Hey, surely you just go and open the positions again.
Yeah, I can, and I will. That's what I was planning to do, just placing trades and whatnot. So let's skip to the basics of trading very, very quickly. So you'll see that I always use TradingView in conjunction with Bybit. Although Bybit uses TradingView charts, do not use these charts. They are the window is far too small, and I find it's a bit of a ball ache clicking expand and what you just don't get the right picture. It's just not user intuitive. So I always use TradingView to execute on the trades. To view my positions, etc., and then Bybit to execute the trades. So try and do that. In terms of the other thing you need to be wary of is every chart will be slightly different. So in this list down here, I have BTC USD, but this is from Coinbase. So this price will be different to the price that Bybit is showing. If I get back to that trade there. And so what I've done is I've created on TradingView a separate section, and this top section here is just the Bybit one. So the way you do that is you can right click anywhere on here and create add section, and then you can add symbols into it. And when you're adding a symbol into it, let's say you want to add Bitcoin, let's say. So you go to Bitcoin USDT, you already know it's a Tether based one, and then look for the Bybit one, and then it always says perpetual contract at the end of it, then add that. So this list here are the Bybit perpetual contract ones. So they are that, like for that chart, will be slightly different than the Ether one I have on my other chart, because you're placing trades on Bybit, right? So you want to know what the chart looks like on Bybit, and it may be a few dollars or a few pennies depending on what you're looking at, but it does make a difference. Also, the really annoying thing here is let's take placing trades on Bitcoin Ether, there's such big numbers. Let's look at something which is around $1. It's just slightly easier to look at. I think Sand is around $1. Yeah, screw that. So Sand, and I'm going to place the smallest, because I'll be deleting this trade as soon as this tutorial is over. Can I do one short? There we go. Right. I'll talk about the mechanics of how to place a trade in a second. So you have this thing called mark price. Now, you have to understand that with Bybit, it's a closed loop environment to a degree. So let's say you have the whole world. Oopsie, I need a pen here. You have the whole world, and obviously cryptos all global, and everyone's trading it everywhere. And because of that, you have the market price, or let's call it the spot price, because that's what it is, the spot price. But the thing is, over, let's say here, we have Bybit, and Bybit has a whole bunch of assets that they're letting us trade via these perpetual contracts, etc. And so the prices you see here in Bybit are slightly different to the global spot price by pennies or dollars, because Bybit still has to make its profits. It makes its money via fees and commissions and whatnot. But also, all of the trading that we do in Bybit has zero effect on the real world market. So I could be a whale, right, and come on here and place a $50 million short on Bitcoin. It won't have any effect on the real world market. So what Bybit has to do is create this sort of internal price of each asset, and that's what it calls the mark price. Where's my mouse gone? And the mark price is here. And so it is slightly different. So if you look at that, it's 185. Yeah. So look at that price there compared to the price of Sand at the top over here. So it's 1.85105, and there's a bit of a difference there. Only pennies, but it's still a difference. So when you're looking at the profit and loss over here, it's using it by the mark price. And the annoying thing is that when you look at your P&L over on the derivatives side over here, it uses a different. It uses actual. This shows you the P&L minus some of the fees, etc. Because I went through a stage a while back, going, holy shit, where's all my money? I'm losing like 20%, 10 to 20%. Because if you were to add up, for example, let's take this board of trades. If you were to add up all of the P&L on this column here, that number would be very different to the number you saw on your floating P&L. Like 10% out. No joke. And it's normally to the downside. So these days, you just look at this. This is really the number you need to care about, because that's what is going to end up in your wallet. What was I saying? Yeah, let's talk.
It was on your order book as well, Sam. So when you look at your order book on the trading screen, you'll see the yellow flag price there in the middle of the order book.
Sorry.
So,
where are you talking about?
The order book next to the
Oops, sorry,
in the middle.
Sorry.
So you see.
Oh, here. Yeah. Sorry. Yes. Yeah.
Yeah. So there's the spot price going up and down in green and red in the middle there, but on the right there's the flag,
Yes.
and that is your.
Oh yeah, the mark price.
That's the funding rate.
Yeah.
Do with your funding rate, and that funding rate, my understanding is it changes every 8 hours or
Yes.
something, or you get charged every 8 hours.
Yes, because it depending on which where you're trading, sometimes shorters get paid pennies, or you get a little bit of fees for facilitating the trade. It depends on which side of the trade you are, but sometimes you make a little bit of a fee, and sometimes you have to pay a little bit of a fee. But yeah, but long story short, you don't need to worry too much about it. It is literally pennies. In fact, I've been placing pretty high trading volumes, and it's negligible in terms of the fees you get. It all gets bundled up into your floating P&L anyway. So let's get back to the actual trading side. I want to get into the basics of trading, because I'm imagining someone is watching this on YouTube, doesn't know much about trading. So when you're looking at a trade and you want to, let's say, place a trade, let's say we want to go long. It looks like a little pullback, it's inbound. Let's say we're going to play with Ether. Let's play something a little simpler, smaller.
Sam,
Yes.
can we have a quick take on the markets now they've opened? On your take.
No, mate. Sorry, not for. I must get this.
Okay, fair enough.
Yeah. It just very quickly. Nothing. Barely anything at the moment in terms of the Dow. So yeah. But yeah, I must continue with this tutorial, bud. Sorry, mate. Shit, what was I talking about? Oh yeah, let's try and place a quick trade. So let's take sand again. It allows us to play some nice small trades. So what I tend to do, well, I've got a whole bunch of different methods, as you know, and like different trading methods or strategies. That we're not going to go into them at the moment. But the principle is that you always have your. Let's say, for example, you have a system that says, right, you need to buy right now. Okay, fine. So you're going to aim to buy whatever at market price around here. First of all, you then need to know where your stop loss is. Again, I'm not going to go into the strategies or etc. But let's just say you want to put your stop loss outside of any noise. So if you're going long and think it's going to go up, let's just say for this example, you want to put it below that wick. So below the 00 number here. So you don't want it on a big psychological magnet there. So you're just going to put it below, somewhere like so. So when I'm eyeing up a trade, I'll then go, right, I want to go in at market, let's say, and I want to, before that, I'm just going to close this trade because we're going to go long now. I always then remember the stop loss. So at this level, you can see the crosshairs. It says my stop loss is going to go at 1.783, and I just remember that number, 1.783. So I then go over to here. I need to find sand. 1.783. And then I normally just hit one up. Let's just put, so you put the position size in first. Let's just put 1 to make things simple. 1.783. You then need to put a stop loss. So we're going long. So you click buy. It says buy long. That makes no sense. With take profit / stop loss. So click that, and I go straight to the stop loss bit. Now normally, just to populate some of the figures, just to save me from fat fingering the keys, I'll just click one of these, 5, 10%, something like that. And then I'll just edit the last numbers. So again, my ship memory hasn't helped. 1.783. So I then type in 1.783. There we go. Now, this is where it helps, because it'll tell you blah blah blah. Obviously, it's doing this via the mark price, not the actual real price. It will show you how much your. Oh yeah, so quick tip: if you're placing stop loss, try and give it an extra bit of a buffer, just to it's always worth having a bit of a buffer, just to make sure the mark price isn't going to screw you over, etc. And also, if you put it really too close to levels, you'll probably get stop hunted. So yeah, just give yourself always a little bit of a buffer. So 1.7, yeah. Just leave it like that for a moment. But the cool thing is it tells you how much money you're going to lose if the trade were to bomb out straight away. So at this point here, it says I'm going to lose 9 pence, basically 0.09 USDT, which is great. Now, this is sort of jumping forwards of why leverage isn't scary when you know what you're doing. A lot of people will look at the amount of leverage you can place with this trade, up to 50x leverage or 2x leverage, etc. But it's a bit of a misnomer. The leverage basically dictates how much margin your account will stump up to place that trade. That's it. So what it basically means is if you were to whack it up to 50x, it means you'll be able to place really huge trades, but with not much money in your account. But what it means is that you're going to get stopped out pretty fast, because the margin requirement. How can I say this properly? Not necessarily stopped out with the market price, but your account will end up just underwater. You don't want high leverage, but I'm going to show you what this means. So for example, let's just say we leave it at 5x long, okay? And I'm going to put a little bit of size on this trade just to show you what I mean. Okay, so here, if I buy, I'm going long on 100 sand. It means with that stop loss, our expected loss is going to be $10, okay? So I click open long, gives me this little confirmation box. And it's worth not clicking that, because it is actually quite good to do a last minute idiot check, because what you can do is see if everything is correct, and also just for idiot purposes, check that the liquidation price is below your stop loss if you're going long. If you're going short, it needs to be above. So here, your stop loss is 1.78, but your liquidation price is 1.52 miles away. So yeah, all is good. So you're placing the trade is then placed. Pretty cool. Now, so for this trade, by the way, the order value was 189 quid. Okay, let's just close that trade. It was 189 quid roughly. If I click, say, 10x for long, and I try and place the same trade. Oh, sorry, I forgot to take a screenshot. It's the amount of. Sorry, let's do it this way. Let's do that again. Open long. Yep. Fine. Okay. So look at the position margin. Okay. So although the trade is $190 in value, what's happened is that the position margin, it's sort of set aside $38.19 from my account to facilitate the trade, and that's what's called the position margin. And all that happens if you use higher leverage, it just means you use less margin. That is literally all the leverage does. So let's close the trade again. And by the way, every time I close it, you close it by the close by, and you can do a limit. So you're putting in a set price where you want it to close. I wouldn't bother with that one. Just click market. So you're closing it at market price. So straight away, basically. See, when I clicked earlier, when I clicked the close all button, I thought I was going to have this little confirmation window. Evidently it didn't. So that's a good learning point. And here's the cool thing. You can either close all of the trade, or you can close half of the trade, or a quarter, or you can actually type in how much of the sand you want to close. So sometimes if you want to take half profits off the table, you can just go to market, 50, boom, half the profits taken off the table. So let's just close that. So remember, it was $38. If I then did this to 10x and then place the same trade, we've got half the. So before it's $38 in margin, now it's only $19. Everything else is the same. I've got the same stop loss, same everything else. If I lose this trade, I'm still losing around $10. Obviously, the market price is moving, that's why it's changed a bit. But nothing else changes. It's just the margin requirements change. So that is why leverage isn't really that scary. So if I was going to, let's say the market is fully recovered, and we start having a bit of a boom market, then what I could probably do is try and optimize my account. And the way I could optimize my account is maybe, if I go back to it, so it's annoying I don't have my trades live, but hey ho. Like, as you saw earlier today, I had all my trades on and about 700 grand just sat there doing nothing, right? Well, what I could do in the future, if I don't want so much tether just lying around doing nothing, and I want to optimize my money as much as possible and try and have as much in these inverse accounts instead of the tether one, is I could, one, take away a lot of the surplus that I don't need, but two, instead of 5x leverage, do say 10x leverage. So I don't actually need that much money. So that way I can get more of my money working for me and still trade the same way. So that's what I will do in a bull market, in a confirmed bull market, not anytime soon. But yeah, so I keep losing my position here. There we go. Yes, go James.
That leverage, you can change that with a live trade. Did you know that?
Yes, you can. Every time you change it, it's done per asset, by the way. So if I go to sand, whoopsie, if I type in sand, yeah, you can change it on a live trade. So. And then it affects the whole of the thing. So you can see that the position requirement has changed. And every time you change this, so too does the liquidation price. Okay. So this is what I mean by you can really get in trouble. So let's just go back to 5x, and I'll show you something. I know this is really boring, but it's important to know, folks, because this is where most people actually blow up their accounts by not understanding this. So obviously, I've got a relatively big chunk of money in this account. So it's saying that, if suddenly everything went wrong, like the liquidation price is miles away, right? The stop loss we've got is sat there at, we didn't put a stop loss in. I don't know, let's just put 1.85. There we go, just any random one. So the stop loss is 1.85, but the liquidation price, this is where if the price were to go down there, and let's say you didn't have a stop, okay, and it had no stop. If the market price suddenly went down to 1.5370, you'd have what's called a margin call, and your account would just close the trade automatically, whether you have a stop loss or not. Now the thing is, the higher the leverage you have, the less of a buffer you have with your liquidation price. So here at 5x, our liquidation price is at 1.570. If I then double this up to say 10x, it's now 1.72. If I now go to, screw it, 50x, It's now 1.87. It's pretty much right up to market. So look at the price. So the price here is 1.87. So yeah, I can have 50x leverage, but if the market price goes down even basically $1, the trade is bombed out. But look at the position margin. It's only to have the same trade to buy 100 sand. It's only used $3.90. You do not want crazy leverage. In fact, just for shits and giggles, I'm going to leave that there and hope that we get a margin call. Because I've never had a margin call on Bybit. I know on FXCM, I've used FXCM for about 18 years now. No, probably about 12 years actually. That has a very chilling when you get margin called, and it's not nice.
So does Bybit have that noise?
I don't know. So yeah, I trade very, very sensibly on my when I do things properly. So yeah, I doubt I'll ever hear it, which is why I sort of want this to go down now and bang us out. Can we get any higher leverage?
Sam?
Yes, hi Benny.
When we get this margin call, for in this instance, how much you lose? Is it the position margin that you will lose?
No, you'll lose whatever the PNL is. So margin calls aren't actually that bad. All it's going to do, it'll kill your trade whether your trade is in profit or not. But most likely it will be obviously negative. But whatever your unrealized, your floating losses are. So,
Right.
I'm just going to jump this onto a
It's
lower.
worth mentioning the difference is isolated and cross margin.
Yeah, I'm coming on to that. So here's the thing with all my trades. Every time you see me place out a trade, I will always be on isolated margin. It doesn't make too much of a difference for me because I'm quite calculated in how I trade, but it is important to note. So if we got a liquidation notice. Oh, no sound. That's annoying. Silent but deadly. But yeah, the market, yeah, we just got margin called basically. But all I lost, I didn't lose my whole account. I just lost whatever the floating P&L is. I still got the. Well, I hope I still. Yeah, I still got all the money in the account.